Good morning, everybody. Once again, we meet for Monday teachings. My name is Lydia Tetolet. I work for a company called Precise Protect, and Precise Protect are regulated and governed by FCA, Financial Conduct Authority. Now, welcome back to our lessons again. And today, this is our 6th lesson. So the first one, we spoke about trust funds and wills and the importance of having your policy, your insurance policy, put in trust. So if you don't have that, or if you don't have a will and you want, my company, like I said, do not do wills, but I know somebody, a lawyer who does wills. So I can help you with that. And if you don't have trust, your policy is not in trust, please get in touch with me and I will help you with that as well. And we also spoke about 40% inheritance tax. And if you have a property and your property is worth more than 325,000, which is the threshold, then you are liable to pay the 40% inheritance tax. But the good thing is there's a way to prevent it and to avoid it. So again, get in touch. And then we also spoke about the different types of life insurance, because people confuse. There's so many different types of life insurance, but people get confused about it. So number 3, we spoke about that and we broke it down. And then number 4, we spoke about the difference between the terminal illness and critical illness. Again, people confuse terminal and critical. These are 2 different policies, terminal illness and critical illness. They don't serve the same purpose. And then we also spoke, now our number 5 was about who can be insured. And it was everybody can be insured. The only thing is, it might not be what you want, or it might not be the way you are thinking, but at least you're insured. And we spoke about different factors that we factor in before you can be insured. And then today is our 6th topic, and we're talking about income protection. Now, what is income protection? Somebody asked me. Income protection is when you protect your income from sickness, injury, or an accident. Only those 3: sickness, injury, or an accident. So some providers, depending on the provider that you go with, they pay from 50 to up to 75%. Some of them even pay up to 75 or even 80% of your annual income. So depending with the provider that you choose. So someone said, why can't they just pay the whole thing? Well, they can't, because if they pay the whole thing, why should I go to work? I'll just pay my income protection, and then when I'm sick, I'll just stay home forever because somebody's paying the whole of my income. But they don't. So they just give you something to help you until you go back to work. Now, depending also with your occupation, some providers might say no. So that's why we have so many providers in the market. And I work with Precise Protect. We work for all the providers in the market. So we know the provider to give you if this is your occupation. That's why we ask. They'll ask you, what's your occupation? If you say is this, we know, okay, which provider are we going to give you with that occupation? Because some providers don't take this particular occupation. Some providers don't take this one, but some providers take all of them. But again, we know the ones that take all of them. And because some occupation are seen as risk, and some providers don't just take like risk, so they wouldn't take you. So that also depends with your occupation, okay? And also the over 50s. If you want to take income protection and you're over 50, wow, that is, yes, you're allowed to take it, but it's a very long process. Even if you don't have medical, our number 5, or last week when we spoke about who can be insured, when we spoke about the factors that we factor in, and I know that medical is something that affects your premiums, but with income protection, whether you have medical or not, but you're over 50, it has to go to underwriting. They have to take it to the underwritings. They have to go and check this and that. You're over 50. Why do you want income protection? Very soon you're going to retire. So it's good to always take income protection when you're younger, before you hit 50. But even 50, yes, you're allowed. But when you hit 60, you're not allowed. Nobody will give you income protection when you're 60. So between the age of 18 to 59, you can take income protection. But from the age of 50 and 59, it's a process. But they will give it to you eventually. But if they just find you with something even small, they'll probably decline it for income protection. They're very strict with income protection. Income protection, they're more strict than life insurance. And then we go to the term of income protection. So income protection, we have 1 year, 2 years, 5 years, and full term. So what does that mean? So 1 year, if you're taking income protection and you say, I'm going to retire at the age of 68, okay? Most people say they're going to retire at the age of 68 or the age of 67. So let's work with 68. So if you say you're going to retire at the age of 68 and you take income protection for 1 year, it's going to be more cheaper. So let's say if you take it for 1 year, this is just an example, not saying that that's how much it is. If you take it for 1 year, example is £20 per month. If you take it for 2 years, of course, it's more money, £25 per month for your premiums. If you say it's 5 years, £30 per month, example. If you say full, £45 a month. Yeah, for your premium. So why is it that these premiums are different? And what's 1 year, 2 years? So if you take it for 1 year and then you fall ill, or you're sick, you're injured, or you're in an accident, and you can't go to work, and I'll tell you after 4 weeks, I'll explain that as well. The insurance will pay you for 1 year. After 1 year, because that's what you're paying for, even though your retirement age is 68, after 1 year, they stop paying you for 6 months. Okay, so your pay stops for a while. In these 6 months, they're going to check why are you not going back to work. So within 6 months, your pay stops. So you have to go back to work. But if it's something that definitely you cannot go back to work, there's no way you can go back to work. Let's say it's a very bad accident, whatever it is, I don't know. They will stop your pay for 6 months. After 6 months, it starts again. The 1 year starts again. After 1 year, after 6 months again, it stops. So it's a cycle of 1 year, stop, 6 months, 1 year, like that. So that's the same thing. If you take 2 years, they pay you for 2 years. Another stop for 6 months, 2 years, like that. If you take 5 years, they pay you for 5 years. 6 months stop, 5 years. If you take full, it doesn't stop. There's no break. And that's why you see if you take full, you're paying £45. So the person who is paying for 1 year is only paying £20. The person paying for full is paying £45. That's example. But at the end, you've all covered yourself up to the age of 68. So the person who is paying for full, there's no that break for 6 months. They just get paid until their retirement age, which is 68. Okay, so that person will be paying more money, but they are covered full. So if they were to get an accident, which yes, we do have people who get this, nobody's immune to these things. So if you get an accident and you can never work again, or if you get sickness or you can never work again, not just accident, but sickness that you cannot work again, and you're paying for this full, which is what I advise my clients to do, they pay you full until the age of 68. Okay, so if you are paying 75% of your annual income, they pay it until you're 68. No stops, no breaks. Now, if you're like, before COVID, we have something called defer period. Okay, so what is defer period? Defer period means that the period that the insurance will take out before they start paying you. So defer period means there's 4 weeks defer period. That means that you have to be sick for 4 weeks. After 4 weeks, insurance starts paying you. Week 5, and you're still sick, and of course we must have proof from your doctor that you're sick, insurance starts paying. Why 4 weeks? Well, before COVID, they used to have 1 day. Some providers used to have 1 day, not all of them. Some providers used to have 1 week. But after COVID, insurance paid a lot of money. I know my clients, my 3 clients also got paid at that time. So from 1 day of sickness, a lot of people got paid. So insurance changed that clause, and now most of the providers now are doing from 4 weeks. So if you're sick and after 4 weeks you're still sick, the insurance start paying you up to 75% of your annual income, depending with which provider you have. Provided you have a sick note, just bring it and they'll pay you. Now, people who work for NHS or the government, doctors, nurses, teachers, civil servants, most of them get paid full pay for 26 weeks. And then half pay 26 weeks. When you're getting paid for that 26 weeks, insurance cannot pay you because you're getting paid. So if your workplace, you have a sick payment in place and it's 4 weeks or 1 month or 3 months. We don't pay you when you're being paid full. We only start paying you when now they've stopped paying you. That's when we start paying you. So income protection, guys, is very, very important. If you still have any questions regards to income protection, please contact me. My number is there. And also, like I always say, you can phone the office or you can write me an email, and I will teach you more about income protection. But I hope that helps about income protection. And guys, like I always say, insurance is very important. Please, let's stop living in a world of it will never happen to me. It can happen to anybody. Until then, I'll see you again next week on Monday with the next topic. Take care and God bless.